Jeffrey Smith, chair of Starboard Value Acquisition Corp, and Manny Medina, executive chair of Cyxtera, working on getting Manny's connection up and running. Jeff, glad to have you here in the meantime. You raised a lot of money for this SPAC last year, and I'm sure have been looking for a lot of targets. How did you settle on Cyxtera?
Hey, Sarah, it's great to be with you. It's nice to be here. We're very excited about this transaction. Thanks for having us on. We were looking for a real operating business in a great industry with great leadership. So as you know, Starboard's invested in undervalued companies for almost 20 years now. And what we've learned as a common theme for everything is that leadership matters. Leadership is incredibly important. So when looking for a target for SVAC, we were looking for a great business with real operations in a great industry with great leadership. And we feel like we got all of that and more with Cyxtera.
I think we have Manny, speaking of said leadership, online. Manny, talk us through the history of Cyxtera. You've had a number of companies, sold one to Verizon, announced another in a SPAC deal lately, and started this company several years ago. Why is it time to go public now?
Hi, Sarah. It's a great pleasure for me to be here today. It's a very exciting day for us. It is actually the next stage of Cyxtera, the growth stage. And I'm thrilled to partner with Jeff and the Starboard team as we take the company to the next level. Cyxtera was born out of a carve-out of very high quality assets that we acquired from CenturyLink, a very large carrier, about 3 years ago. When we carved out the assets, the whole goal was to create a global platform of retail co-location facilities, which are best in class. It took about 2.5 years or so for us to stand up all the systems, to create a new sales force, to create a brand, and to create and develop a significant number of connectivity products that we now have in the market and get everything set. That all finished towards the end of 2019. 2020 was a stellar year for us, where we grew significantly our sales, our churn was significantly down, so it was really time now for us to go public, and that's why we're so excited about this next stage.
So Manny, described as retail co-location data centers, what exactly is that? And is this just services for those in retail, or is the growth opportunity to use the same platform in other sectors too?
It's a great question, Wilfred, and the difference is one. So when you talk about wholesale, think about one facility that is actually occupied by one customer, like AWS or Amazon. Retail is a facility that has hundreds of customers that are interconnecting with one another. We have 2,300 blue chip customers around the world. These blue chip customers are mostly very large enterprises and government agencies. So at the same time, we also have a large number of service providers, of kind of providers that are selling their digital wares, if you will. So a retail co-location facility is where they come together, and you can buy and sell your wares from one another. At the same time, you're able to access your IT infrastructure wherever it is, whether it's in a public cloud, whether it's in a private cloud, or whether it's of course, in the facility. So these retail co-locations, think about a marketplace of digital wares where you have customers buying from sellers and buyers, and that's the difference between a retail co-location facility. They're massively interconnected with hundreds of connections being made between them, and that creates that vibrancy in the marketplace.
Yeah, I think Equinix is the big competitor there. Jeff, there are so many SPACs, multiple SPAC deals a day, and a lot of them are sexy EV plays or EV battery plays. Why is this one unique, and why do you see the growth potential here with data centers?
Yeah, Sarah, thank you. So you're right. There's a lot of SPAC deals. It's a new way for late-stage private companies to go public, and we can talk about all the reasons why, and it's very efficient. But the common theme for all of these companies that are coming public, and all companies that are public, and I think for everyone who's thinking about technology in the world, is that we're all using data more. We all expect data to be around and available and reliable and faster. So more and more data, more and more reliable, faster. Everybody agrees that that's the future. But the only way we can have that is if that data is going through data centers. So in order to be able to get to the internet, to get down from the internet, to interconnect between companies and their apps, all of that information, all of that data has to go through data centers. That's what gets us so excited about this is no matter which way you go, no matter which EV company is going to be most successful, no matter which biotech company is going to discover the next cure for something else or analyze different data in order to come up with the next cure for cancer, it all relies on data moving very fast and being very reliable.
Shepard Smith here. Thanks for watching CNBC on YouTube.